Well, good morning, ladies and gentlemen, and welcome to this panel on government assistance and where we go from here. And I see people are still coming in, but the time is short, so let us begin. I think the theme of this panel, I think, is a reflection of the extraordinary period that we have been through and in some sense are still involved in which government has intervened in the private sector and intervened in the economy in really extraordinary ways, certainly from recent historical perspective. Government has put massive amounts of capital into the private sector. It's established ownership stakes in many companies, and it's been involved in intervention, quote unquote, in a variety of ways that are really a break in a long-term trend. We've had a long-term trend towards less government direct involvement in the economy, but that trend has been broken, often with discomfort on the part of governments that felt that they were really required or compelled to take this action. The question we face today, as the economic crisis is certainly not over, but it's abating, and there's a return to more normalcy, whatever that means. The question is, where do we go from here? What assistance should government be providing going forward? Should we go back to the previous model, this just being a temporary introduction or break in that model, or is there some new role of government assistance that we should be pursuing going forward? In order to discuss this question, we have a distinguished panel, and you all know who most of them are, but very briefly, we have Montek Ahluwalia, who's the Deputy Chairman of the Planning Commission of India, Dominic Barton, the World Managing Director of McKinsey and Company, John Evans, the General Secretary of the Trade Union Advisory Committee to the OECD, a trade union leader, distinguished trade union leader. David Cameron, the leader of the Conservative Party in the UK. Andrei, Kostin, the chairman and CEO of VTB Bank in Russia and a distinguished banker. Peter Sands, the group CEO of Standard Chartered Bank. And last but certainly not least, Jean-Claude Trichet, president of the European Central Bank. In attacking this topic with such a large and distinguished panel, we have divided the topic into really three broad areas. And we would propose to proceed through those three areas as follows. First, the focus will be on the financial sector. That's the area where perhaps the most government assistance and intervention has taken place. What next? What should be government's role in the financial sector? Should the involvement be wound down? In what way? How? Where do we go from here? Second, the corporate sector. Government has ownership stakes now in many companies, and again, what is the path forward? How should we rethink or restructure those stakes? And then finally, and in some ways most broadly, the whole issue of economic and job growth. We're in a relatively fragile recovery. Growth is perceived to be slow in many parts of the world. We've lost millions and millions of jobs around the world. What should government be doing to assist in jump-starting economic growth and job creation going forward? So let's start with the financial sector, and let's start with Mr. Kostin. In terms of government involvement in the financial sector, where do we go from here?
Thank you. I think that crisis showed unprecedented involvement of the government in the financial sector and also unprecedented level of cooperation between the financial banking community and the government. President Reagan once said that the most terrible words in English is "I'm from the government and I'm here to help." But I think during the crisis, that's the question which most of the financial institutions were glad to hear. And most of the governments made, I think, quite a brave steps. They spent a huge amount of taxpayers' money to support financial sector. And again, I would like to underline that was a very high level of cooperation between financial sector and the governments. Unfortunately, in my opinion, that this spirit of cooperation was lost over the last few months, probably. And we definitely see a growing concern among the banking community that the government is not quite correctly understanding the issue of financial sector. They're not quite correctly addressing this issue, and they are probably, there's extremely harsh criticism on bankers, their activity, their position, though generally, of course, banking community understands the necessity of changing the system, changing the regulatory rules, not necessarily by more regulations, but rather better regulations and more probably efforts to have the regulations on an international level to control the activity of global international institutions. I think if we take Russia, for example, I have to say the situation is a little bit different because we still enjoy a very good understanding between the government and the financial sector of what steps should be undertaken in order to reach an economic growth. And I think there's a public opinion is quite, well, reasonably good to Russian bankers. Now, what's going to happen now after the government spent a lot of money and sometimes even went into the directly involved in financial institutions, which was unthinkable in the United States, for example, that the American government would buy direct stakes in leading American banks. I think in the midterm and long-term run, I think the role of the government financial sector, of the direct involvement, will be diminishing, because I don't think that there is a strategy, either in the United States or in Europe or in Russia, that the government should keep the controlling or even the big stakes in leading financial institutions. You see in America, the banks are trying to return whatever money they've got from the government. Of course, if the market permits, I'm quite sure that the British government sooner or later will think over how to privatize whatever assets they acquired during the crisis. In Russia, that's the same. I think there's any political or strategic decision that the government should necessarily keep the higher stake or higher role in the Russian banking sector. I think where the government will concentrate its effort definitely in trying to have a bigger say in controlling, in actually monitoring the financial institutions and financial sector. If we remember, before the crisis, there was a trend that the largest bank was claiming that the self-regulatory system is the best, that the large institutions can supervise themselves, that the regulations can be organized on a different basis. I think that's the end of this trend. I think now we're coming back to a stricter control of the government and the creation of some kind of international bodies or international efforts to have the global regulation of the financial sector.
Peter Sands.
I think the relationship between banks and governments, and by extension society, has changed irreversibly. So none of us should be kidding ourselves that it's going to go back to the way it was before the crisis. Which is not to say it's necessarily going to be the way it is right now, but it is definitely going to be different from what it was before the crisis. There's a set of issues which are around undoing or extricating or exiting the emergency measures put in place in the crisis. As Andrei was talking about, equity injections, liquidity provision, and all that sort of stuff. But I want to focus more on the broader issue of the relationship of banks to governments and society, and that includes banks which took no help whatsoever, because I think that has fundamentally changed. And I think there are two aspects to this. One is a sort of more technocratic, the regulatory relationship, the relationship with central banks, the supervisory relationship. I think we are in the process of working out how to craft that new relationship. The discussions aren't necessarily easy. Some of them are very technical. But there is an acceptance within the industry, and there's a common language and understanding of objectives between regulators, central banks, and bankers, We need better regulation. We need more capital than we had before the crisis. We need better liquidity regulation. We need to address the too big to fail problem. So there's a common set of understanding, and I think increasingly a very constructive dialogue. So I can see the way forward as to how we craft a better relationship there. The more challenging strand of how banks and banking and bankers craft a new relationship with governments and society is on the political side. And there, I think, it's a much more challenging to see how the path unfolds and how we get to a better place. I think banks have not helped themselves at all. As an industry, we've managed to be simultaneously tone deaf, shooting ourselves in the foot, insensitive. You can think of lots of metaphors here. I also think some politicians haven't been helpful. Sort of broad-scale demonization of an industry that actually is vital to the resumption of economic growth is not necessarily terribly helpful in working out how to construct a better relationship. So, in short, what I think is, I think on the technical regulatory side, there are many tough debates to be had, many tough decisions, but I can see it happening. On the exit from the emergency measures, again, some difficult issues, but I can see it being manageable. I think the primary challenge for both bankers and politicians is to address that broader relationship issue, which comes down to values, comes down to the whole fundamental social purpose of banks. And that, I think, we haven't done well. Absolutely, the banks have not played their part properly in it. And that's the one we need to grapple with. If I could just add one other complication. The trouble is, we can't just craft individual solutions for individual countries. The solutions we work in terms of crafting this relationship have to work both at the level of an individual country and at the international level, because, like it or not, we've got a globalized world and a globalized financial system.
Mr. Trichet, you're a central banker. What's your perspective on this discussion?
Well, first of all, I would echo what has just been said on the amplitude of the public involvement in the recent period. It's currently, I have to say, underestimated, in my opinion, that we were very close to a depression, a full-fledged depression, had not, as you just said, dear friend, the central banks on the one hand, and then governments on the other hand, step in to avoid what would have been a catastrophic development. The central bank did things on both sides of the channel, on both sides of the Atlantic, everywhere in the world that were unthinkable before this crisis erupted. And the governments put on the table a level of taxpayer risk which was necessary to avoid the depression, but represented on both sides of the Atlantic, when all computation is made, recapitalization option, the option for guaranteeing the loans of the banks, the impaired assets options, and so forth, I arrived to 25% of the GDP on both sides of the Atlantic. It's surprising that finally it appears that it is approximately the same amount. Gigantic amount, which very fortunately, of course, because we are succeeding, will not be transformed in spendings or losses, but gives an order of magnitude of what was necessary to avoid the collapse of the system. So that being said, where do we stand now in terms of public authority involvement? First of all, I have to say that, and I echo again what has just been said, we have a global problem. We could see that a single event in the US could have immediate, I mean, it was a question of half days, a dramatic influence of the changes of the decision-making process all over the world. We have to find out global solution. That's absolutely clear. And we are fortunate, if I may, in this difficult period, because we have a consensus at the level of the world, a consensus on principles, for instance, that market economy remain the best way to produce wealth. There is a consensus on that. There is a consensus on the fact that the global finance appear to be fragile to an extent which was under-assessed before, ex ante, and that we have to make the system much more resilient. We have a consensus on the methodology. We have a consensus on the enlargement of global governance to the G20, to have around the table both the emerging world and the industrialized world. And we are working, I have to say very actively now, to try to make global finance much more resilient, which means, as has been said again, better regulation, not necessarily much more regulation, but better regulation, because there is one thing which is absolutely clear. The public authority will not be forgiven if they don't care for the system to be much more resilient, which means that we have to improve everything, in my opinion, not scapegoating any part and parcel of the system. And again, I would echo what has been said on the scapegoating exercise is a bad exercise, because when you scapegoat one part and parcel, banks or rating agencies or accounting rules or whatever, then you forgot the other. We have to improve everything, including, of course, the risk management of banks and the behavior of banks, but not exclusively banks, everything. And let me only conclude on that. We are working very actively. A lot of ideas are examined. The G20 methodology is accepted. The Financial Stability Board does a good job. The Basel Committee is working extremely actively. And all other working groups that we have at a global level with the emerging world, we have to maintain this level playing field. We have to be absolutely sure that we will find out solutions at the global level. If the solutions are only local, regional, continental, national, it's a recipe for catastrophe. And of course, I elaborate no more, because we have another side of the coin at the global level, which is the surveillance of macro policies within the G20, but it's another story.
Okay, David?
Thank you. I just wanted, there's a danger we're all going to be agreeing with each other, and that won't make for much of a debate. But I mean, I wanted to strongly agree with what both Peter and Jean-Claude have just said. Firstly, I think it's right that we must base our response on hard-headed, practical self-interest and not politics of envy, not scapegoating. I think that's incredibly important. And that's particularly important, as Peter said, for politicians to understand. I just wanted to draw out what I think are two lessons, one on the point about regulation that Jean-Claude was making, and one on the point about relationships that Peter was talking about. On regulation, I think the UK experience, I think, shows that it's not so much an issue of the quantity of regulation, it's the quality. But as well as the quality, it's also the authority of the regulator and the clarity of the regulatory structure. And that's why our view is that we need to change the regulatory system to end the so-called tripartite of having three different players in it and vest much more power and authority in the central bank. We think that the central bank has that, is the best place to put the natural authority and discretion that you need in good regulation, rather than believing that you can write a perfect set of rules. And if you look at the UK experience, where there was such a problem of excessive leverage, I think greater centralisation of the Bank of England would have helped on that. On the issue of the relationship between politicians and banks, society and banks, I think Peter is right. It does need to change quite fundamentally because of what has happened. And the way I think about it is quite simple, which is the banks now know that the taxpayers will not allow them, rightly, to go under, because the risk to the economy of a depression rather than a recession is there. And I think in return, the taxpayer, through the government, is quite entitled to say to the banks, well, that means this relationship needs to change in some other ways. And that's why I think two of the things that President Obama said, we particularly welcome. One, that there are things at the very riskiest end, the large-scale proprietary trading, for instance, that shouldn't really be backed by retail deposits. And the second thing, perhaps controversially for a conservative politician, is as we look at how we create what Jean-Claude said, a more robust system, a more resilient system for the future, the idea of some sort of insurance levy, both to pay for the mistakes of the past, but to protect and enhance our system for the future. If that can be agreed internationally, we think that is something that is very worthwhile. And that's a reflection, I hope not a knee-jerk reaction, it's a reflection of a changed relationship, given all that's happened, given the relationships and how it needs to work in the future.
Mr. Evans?
Just maybe a contextual point on before we leave the banking sector. I think it would be wrong if anyone in this room want to underestimate, firstly, what Mr. Trichet just said, how close we were to a total meltdown 18 months ago of the financial system, which would have sparked a major recession. And it was essentially the governments, the coordination, which actually put the patient onto life support when it was about to actually have a fatal heart attack. Now, I think the patient is still on that life support system. And I think it would be also wrong to underestimate the degree of anger, which certainly in the organizations I represent, you feel when you go to meetings with groups of workers, people who've lost their jobs, their homes, their pensions, at that situation and what went wrong. So again, perhaps unfortunately for this panel, but just agreeing with what's been said, the idea that governments now can walk away, having spent the trillions, and say, okay, boys, get on with it as it was, is just unthinkable. The accountability, how the system works in the future, and to ensure that that does not happen again, and we have a financial system which returns to the job of supporting the real economy and not the real economy just supporting a speculative bubble, seems to be, it's unthinkable that governments and public policy could move away from that responsibility.
So what are the key elements of that new responsibility?
Well, I think one thing, I mean, the other message I hear is that in the discussions around the new system, and we watch very closely, obviously, the discussions in the Financial Stability Board and many of the areas we're in, my message would be open that process up. The people I represent say, look, these are the people who brought you the crisis. Jean-Claude may have helped solve the crisis, but it's seen as being bankers, financiers who actually were responsible for it in the first place, who are now designing the same system, which is actually supposed to prevent a future crisis. I think you have to have a stakeholder approach of engaging all the interested parties about where the balance between regulation is and where the balance between liberalisation is, where the balance between ownership is, break up the banking sector as well into feasible units. And beyond that, I think you have to have a structure which is credible to also the public and not just to the financial sector. Now, there are different ways you do that in different countries, and I certainly believe that you need to coordinate that to avoid regulatory arbitrage internationally. But I think that has to be some of the agenda rolling out in the future on the financial sector.
Mr. Ahluwalia?
Well, I'm not a banker, but I'm coming at it from a government sort of perspective. In one respect, we've been fortunate in India because the direct government assistance to bail out banks was not an issue. Our banks were very conservatively run and were completely stable. So we don't have the problem of how do we handle all the special assistance that's been given. The larger issue of what's happening to the regulatory structure is clearly something very relevant for us. I mean, Mr. Trichet pointed out that a whole new regulatory structure is being worked out in the Financial Stability Board. We participate in it. In fact, the expansion of what used to be the Financial Stability Forum into a Financial Stability Board, which includes all the G20 countries, is an important democratization of the way in which central banking regulation is going to be done. So we are participating in that. And I think the real issue for us is going to be questions that will be raised and are raised at home, that, you know, in the light of the fact that the global financial system, rather the financial system in industrialized countries, is now seen to have been engaged in too much of risk-taking, too much of a free-for-all, too much of a market knows best sort of ideology, which is now changing. What does this imply from our point of view? And I think our view is that we've been fairly conservative. We were nowhere near the frontiers of this kind of financial innovation. And our strategy then was that we should gradually move to what is the consensus on good financing. Now, that consensus certainly changed in the sense there'll be less of the innovative free-for-all activity. But we're so far internal to the frontier that we will have to keep on moving in the same direction. So I think we have to persuade our population, public, et cetera, that even as the industrialized countries appear to be shrinking, we may well be expanding the scope for liberalization in the financial system. And that's actually what we've been doing. We've been saying that, we've been introducing new instruments, and giving a clear signal that financial liberalization in India is necessary, is going to continue, but it will now be targeted to reach the end result of whatever emerges out of the FSB as a regulatory structure that makes sense. All these issues of too big to fail, how much innovation, leverage caps, all of this will get built into our own structure. But we are fortunate that we were nowhere near a position where we would be directly affected. So we escaped from the financial crisis with a financial system that was whole and didn't really require very much government assistance other than short-term liquidity support in the first 6 months.
So this is not an excuse to back off of liberalization?
Definitely not, in my view.
Mr. Kostin, in Russia as well, in Eastern Europe and other emerging countries, is this going to be an excuse to stop progress towards liberalization?
Not at all, though I have to say that Russian financial system, just like in India, probably very differs very much from the Western. And so if Mr. Sarkozy here said that the banks should give loans to the real sector rather than playing on the stock market, that's exactly what Russian banks were doing. That's exactly when the threat for us came from. Because actually when the real economy started not to perform too well, then we had the problem of non-performing loans. I mean, I would say that, yes, we have a little bit different situation, and for us, the financial sector was maybe not as severe as we saw it in the West, though we also understand that we are already part of the international community, and we are very much dependent on the international capital market, international debt market. So for us, there's no way back. And that's important, because when I talk about regulations now, I think it's important not to say, listen, in 1930s, there were good legislations adopted in the United States. Let's come back to this legislation, and then we'll have another 50, 60, 80 years of comfortable life. I think we should really build up a new system of this, and the concern of the banking community is if we create too much limits on this, if we create too much supervision, that the industry itself will not be developing, will not be producing enough funding for the real economy. There will be no economic growth without the proper organization of financial sector. So not to overkill, that's I think is a very big concern among the banking community.
Well, we're going to make a transition soon here, but maybe perhaps a final comment on the banking sector and the government involvement in that sector.
Yeah, I think by now everybody in Davos has probably had their fill of talking about banking, but I'll just make one closing comment building on what Andrei Kostin said. At the heart of much of the debates around the future of the banking system and the regulatory frameworks and so on is a trade-off between how safe do we want the banking system to be, so minimizing the risk of another crisis, versus how efficient and effective we want it to be in supporting the real economy, generating jobs, and so on. There are many things we can do that pursue both objectives. We all want both objectives, but there are also some trade-offs between those two objectives, and we need to tease those out and understand those very carefully. And that is something that I think the Basel Committee, the Financial Stability Board, is working on and is very engaged in. But I also think, to your comments, it isn't something that should be just resolved or thought about by technocrats, bankers, regulators, and so on, because the stakes for society as a whole are very big. If we get it wrong one way, we run the risk of having another crisis. If we get it wrong the other way, we run the risk of starving the real economy of enough credit and capital, and then not having the kind of recovery, the kind of job creation that the world needs. So it is a very high-stakes game.
Well, that's a great segue, Peter. So this discussion about the financial sector and regulation and banking is a mature discussion at this point. We've been talking about this a lot for the last 12 months, and especially for the last 6 months. But then, of course, there's the real economy. There's the corporate sector. There's the businesses that have to create the jobs that are going to replace all the millions and millions of jobs that were lost. And there's a great concern about how quickly that process restarts and how many jobs are created. And there's grave concerns that job creation will be too slow, and it will be years and years and years before we recover. So you're starting to hear a new discussion about what government needs to do to stimulate economic growth, what government needs to do to create jobs. We hear all kinds of schemes flowing around. In our country, the whole green jobs movement is, kind of a very hot thing. That if green jobs are going to save us, there are many other discussions around the world. And then government, of course, still has some ownership stakes that it picked up in the economy in a variety of industries for emergency reasons, like in our auto industry. So, Dominic, Barton, could you lead us into this discussion? Where do we go from here? What should be the role of government going forward in trying to stimulate and enhance economic growth and improve job creation?
Well, I think a couple of things I'd say at the beginning is that there's no doubt that government has increased its role in the economy, particularly I'd say in industrialized economies, in some countries by up to 10 percentage points of GDP. Interestingly, though, I'd say in many of the emerging markets, it's going the other way. You're seeing less involvement, and I don't think, as we've heard in the conversations here, that that's going to switch back. It's moving that way, but certainly the government's more involved. I think there's a worry from the corporate sector that you can have, there's good government and bad government, or to use a terrible analogy, there's good cholesterol and bad cholesterol in terms of how you move it through. And I think the view of government picking winners or the government trying to decide where jobs should be created and how they move, I think gets people concerned. What I call soundbite policy analysis, the pressure that government's under to make decisions quickly in what are really complicated long-term issues, I think worries people. So when you mentioned the green growth side, when you actually look at it on the U.S. side of things, it seems like a great opportunity. When you actually look at potential job creation, it's relatively small. It's less than 1% of what could be there in terms of the other picture. And when you actually look at those jobs, many of those jobs, by the way, in solar may be created in China, not in the U.S. So you need to get a more granular look. But that said, if I look to sort of the good government involvement, if we will, I think that involves both the private sector and the public sector working together to figure out what these problems are. I think we need more long-term policy work and cooperation together to move it forward. Just to give you a couple of examples, again, from the emerging markets, if you look at what China did with their NDRC, which again is more of a long-term vehicle, they in terms of thinking about where the economy is going, which involves private sector people, they realized if you want to create jobs and you have a stimulation program, perhaps one of the things you have to deal with is the healthcare system, which is broken and not there. You're not going to get consumers to save less unless you have a better healthcare system. So being able to parse that and dig it down is quite important in coming up with those solutions. The Singaporeans with their Economic Strategy Committee, again, you've got a mixture of government, private sector, academics that are, again, thinking long-term, more through-cycle views to work on the opportunities and issues that I think where there could be real opportunities. So I hope we can move to more of that type of a model, a little more long-term perspectives, looking at the fundamentals and trying to all contribute, because with whatever 34 million jobs that have been lost in the last 18 months around the world, it's in business interest to help figure that out. But it's going to take business and government working together to work on some of those issues and incentives.
Well, strategic thinking is a great idea, Dominic, and both of you and I agree on that. Perhaps we could turn to David Cameron. What should government be doing to restart economic growth, to make sure those jobs come back? Dominic says we need to work public-private sectors together, be thoughtful, be strategic, take the long-term perspective, but of course there's a lot of pressure to do something.
I think the first thing is we've got to make sure we learn the right lessons from the crisis. One of those, it wasn't the free enterprise system as a whole that failed. It was a financial bubble and imbalances that caused the problem. And so we mustn't go back to some sort of failed corporatist model of picking winners. I think that would be a big mistake. I think another lesson to learn is that not every country is in the same situation. When it comes to stimulating growth, and the situation many countries now face, the UK perhaps in particular, is there is not government money to do this. The British government faces a 13% budget deficit. The greatest threat, in my view, to the British economy is not from taking on that deficit. The greatest threat is actually putting off the action that needs to be taken. So not every country is in the same situation. I think that is important. So the challenge for policymakers, if you like, is how do we rebalance the economy? We've been too dependent on financial services and housing booms and government money. In the UK case, that was 70% of our growth. How do we rebalance the economy without a failed strategy of sort of picking winners? And the second big question for policymakers is how do we get growth when there isn't any money around, when actually we should be in the phase of deficit reduction rather than deficit spending. Now, one thing that I think policymakers should be grabbing hold of and putting back to the top of the agenda is something that sadly is far too low down the agenda, which is the Doha trade round. I mean, if we want something that would get growth going, that would benefit both developing countries and developed countries, I mean, it's there right in front of us, and it's a pity that we can't seem to get that moving. A lot of the deal is there, is ready to be done. I think that is hugely important. While I'm sure Dominic is right about the scale of green tech jobs, it's certainly an area that is not about government picking winners. It's about governments understanding how future energy markets are going to work. It's about decentralization. Some of it's about deregulation, as well as putting in place some of the infrastructure. So I think that could make a difference. But the big challenge is trying to do this in a new way rather than trying to return to some sort of failed 1970s corporatist model.
Mr. Evans?
Well, I think the one message I draw, and it's precisely this point, that employment has to come centre stage. I think the real risk of a jobless recovery and a degree of complacency setting in, that now that growth is picking up slightly, that the pressure can come off. I think that's a key danger for tackling the jobs crisis over the next 6 months. So I think governments have got a short-term crisis to deal with, how to try to get more growth, more employment growth out of the growth that's taking place, how to reorientate some of the stimulus packages, which relatively little has been spent on job creation, training, skills development, ideas which can produce a better long-term situation in the short term, refocus that. And I would say also, I think on the green jobs debate, we're just at the beginning, not at the end. We have to tackle climate change. You have to link agendas on jobs in the short term. But I think there is a longer-term lesson, and if I could just comment on one point that David Cameron just made, that if you look at what's happened over the last 20 years on labour markets, I mean, the industrialised countries have seen this massive rise in inequality and growth of poverty in some areas at the same time of a great deal of wealth at the top of the scale. So I don't think it's going to be a question of the politics of envy in the future. I think we have to design a growth model which actually manages to distribute growth better. So I think the other challenge in the more medium term is, in this crisis, how do we strengthen institutions which can show, as in some economies, they're rather good at getting distribution of income fairer. And also there's a certain amount of evidence to show that the fairer societies tend to work better economically over the longer term. I think you have to reduce that globally. I think you have to reduce it nationally. And I think that issue about how you deal with it is crucial. The last point, the International Labour Organization, in a tripartite way, through employers, trade unions, and governments, last summer negotiated a Global Jobs Pact, which actually tried to get agreement on some of the measures which need to be taken. So I'd say a stakeholder approach, also at the national level, bringing those constituents together, seeing how we can get joint action in the future, seems to be crucial if we're going to get out of this crisis and not return to some of the problems of the past.
Could you give us some hints? What are some of the steps, the models that you were referring to? You didn't come out and...
Well, in the short term, as I say, there are schemes which can keep people in work. I certainly think some of the intelligent work-sharing ideas have been positive. People have been able to be reskilled and trained. They haven't fallen into long-term unemployment. The issue now is how does that translate, and can resources be put into trying to actually move into job creation in the short term? One key issue is confidence. As has been said, an issue is how we have resources for that. I think that has to be addressed. I just came from a jobs panel earlier this morning where we put a question to the audience: if you had to choose between reducing deficits in 2010 and creating jobs, what would be the choice? 3/4 of the audience said creating jobs. Now, I'd say that's a statistically relevant measurement of the view of Davos that I hope you'll convey to bond markets in the immediate future. But I think we also have to look at new measures of taxation, transaction taxes as well, trying to pull in more resources from sectors which have to also be responsible for this crisis. And I think also seeing how we can target investment in the medium term to be more effective. Longer term, I think, again, we have to strengthen the sort of institutions, I would say collective bargaining, but also labour market interventions, which are successful in actually redistributing. I think that's part of the model of the last 20 years, which has gone wrong. It's not returning to an old corporatist system, but it's one which I would say, in addition to rethink, redesign, rebuild, puts redistribution up there as perhaps an issue for the World Economic Forum.
Mr. Trichet.
First of all, I would pick up what my neighbor just said to draw the attention on the fact that if we want to create a job as soon as possible, we need confidence. We need confidence in the household constituency, confidence in the entrepreneur constituencies, and also in the market constituency, of course. And to get confidence, you have to be credible in having a path permitting you to be back to normal and to sustainable position as regards public finance. So I would really recommend, of course it depends on a country-to-country basis, but being able as soon as possible to demonstrate that you have a credible path towards sustainable position is essential, in my opinion, for confidence today and for jobs today. So I don't see, in the question which was asked, I see a slight contradiction because it's a little bit more complex than that. And again, confidence is of the essence, and it is what the central banks are trying to do. I mean, to be anchor of stability and confidence. Now, on the longer term, I would say that we have so many challenges, being sure that the system is much more resilient. Let's make the working assumption that we do that. Then we have also science and technology which are moving at a speed which is absolutely incredible, and probably for dozens and dozens of years. We have the success of India, success of China, the success of the emerging world, of Latin America, which calls for incredible changes at the level of the planet. And then in the industrialized world, the problem is to be sufficiently flexible to take advantage of those enormous successes, because we have to run a scientific success, a technological success, a success in development in the what we called before the third world, which is now the emerging world, and which is taking a dominant position. And this, of course, calls for being flexible if we want to have all the benefits of this new world and the jobs that we need. So I would call for structural reforms and appropriate flexibility.
Mr. Ahluwalia.
Well, actually, I think those are very wise words from Mr. Trichet. And, you know, I think a phrase like "we must protect jobs," it's understandable that in a crisis that would come up, and there will be a great demand for ideas. But what I fear is that the supply of bad ideas will greatly exceed the supply of good ideas. So a lot of things can be done under the guise of protecting jobs, which will actually undermine the long-term objectives that we all have in mind. And certainly in India, we're keeping that very much in mind. I mean, let me just comment on how we see it. Now, obviously, our situation is a bit different in the sense that we were happily growing at 9% for 4 years. In the 2 years that the crisis has affected us, that growth rate has gone down to an average of, say, 7%. That's a big drop, but it's still a pretty good growth rate. But certainly the demand in India is what's happening to all the jobs that you promised would be created. And of course, our answer is that the solution lies in getting back to 9%. And so government policy is really focusing on how do we get ourselves back to a 9% growth. Now, the challenge there is pretty obvious in the sense that we know that in the industrialized world, there is a lot of global rebalancing of demand that has to take place. Hopefully, the G20 summits will bring about some greater consensus on how that's to be done. But, you know, even if that transition is managed very well, most people would think that the new normal for the world is not going to be like the old normal. So can a country like India grow at 9% if the industrialized countries, at best, will grow 1% less or 1.5% less than they were doing in the previous 5 years? Now, we recognize that the world has changed and that, therefore, export growth and, therefore, demand from the export side is going to be less than it was earlier. And so the issue arises, we don't have any doubt that on the supply side, we have the capacity to grow at 9%. So for us, the challenge is where's the demand going to come from? It's not going to come from exports to the same extent. Our internal thinking is that that demand should come from enhanced domestic investment. And that investment should be in infrastructure, because that is the biggest supply constraint affecting India in the medium term. Now, how do we do that? I don't think we envisage doing it by a huge increase in public investment. I don't think the fiscal situation would actually stand that. So the strategy is to increase investment in infrastructure and to rely on public-private partnership, sort of use public money where private money wouldn't come in, rural infrastructure, all kinds of things that are important for the rural economy, but to use the available public money to leverage private investment through appropriate structuring of projects and arrangements. And we're doing that in a vast range of sectors in the economy, from telecom to roads, shipping, ports, airports, railway movement, etc. The strategies are different, but in each case, the effort is to put in place a framework that will bring in private money. Now, we're doing this in a background where private investment in India has done very well. We obviously have a stake in the global economy stabilizing as quickly as possible. I think one new issue that this does raise in connection with the financing of such investment, is there a case for more innovative, publicly supported financing mechanisms, or do you just leave it to the normal financing system to provide the finance, providing the projects are there? This is something that we're really looking at, because the truth of the matter is there are many areas where government regulation, differential treatment of regulatory standards, hidden subsidies, etc., manage to push finance in a more attractive way in certain areas. In our case, we have a financial system which is still developing. So there may be more of a case for doing something. We don't have a firm conclusion on this, but that's an area we're trying to explore. But otherwise, essentially, jobs are going to come when growth recovers, and we think that we can get back to 9% if we can manage these particular challenges properly.
So we've talked about confidence, we've talked about a path to a sustainable growth, rebalancing of demand, the need to establish more domestic demand and investment in the emerging markets, perhaps new financial tools. Peter, how would you?
The point I'd like to emphasize is trade and avoiding protectionism. The challenge is that, for very understandable reasons, discussions about job protection, dealing with unemployment in many countries, quickly translates into how can we protect jobs from the threat of either being migrated overseas or from exports from other countries. And one area in which both businesses and governments are endlessly creative is finding new ways of being protectionist, new and more obscure and less visible ways, be it through straight sort of trade protection or between financial regulations, even environmental regulations, currency policy, and so on. And I think it would be a tragedy for the world if we do see that. And I think there are a lot of pressures in the world. I think the general direction of the world, despite some noble efforts in the other direction, is to be more protectionist at the moment. And so I would echo David's comments about the importance of trying to progress the Doha round, because I think trade policy is one of these areas where if you're not pushing the bicycle forward, if you're not riding the bicycle forward, you're falling off, you're going backwards. And the world has a lot at stake in making sure that we don't quietly end up in a more fragmented protectionist system.
David?
I very much agree with that, as Peter said. I think one of the successes in this very difficult recession is that although there's been protectionist rhetoric and there have been some protectionist moves, there hasn't been a sort of wholesale, But I agree with you, you've got to keep moving forward, and I think it's one of the biggest opportunities in a world where we need to rebalance, where the countries, particularly the West, we need to trade more, we need to export more. We need this new growth model, which needs to be a model, in our case, more based on saving and investment and export rather than housing and finance and government. And this is one of the key ways in which we could do it. I just wanted to echo something Jean-Claude said on this issue of confidence, and I think it is wrong to say that there's somehow a choice for some countries between early deficit reduction and job creation. For some countries, there simply isn't a choice. Actually, if we don't get on and make some early steps towards deficit reduction, we've seen in the case of Greece where this can lead and the pain that it can cause. And I think there's a great danger, particularly as the crisis phase of the difficulty passes, that whereas political leaders were saying, we mustn't put off what needs to be done, we must take this action, as the crisis point phase, politicians start saying, well, why don't we wait and see? Let's just put these decisions off. I think it's a very dangerous thing to do. As many economists have been saying, the debt and deficit crisis could actually replace the leverage crisis that we've seen. I'm very interested in what Montek was saying about private finance. We have huge experience of this in the UK. Some great successes, but there is always a danger that what should be about sharing risk between public and private sector just becomes a way of government keeping its liabilities off the balance sheet. And if we had some advice, we'd love to take part in your private finance initiatives, and I'm sure there are all sorts of opportunities for the UK in this, but there are also risks to be avoided about building up liabilities for future generations when there isn't a real transfer of risk involved.
Quick rejoinder,
yeah,
very quick.
I'm very aware of both the UK experience, and actually we benefited from it, because we've been in touch with Partnership UK and sort of trying to find out what has worked in the UK and where not. I think this whole issue of the balance of risks and the appearance of transparency is very important. I mean, in India, one man's public-private partnership can become another man's crony capitalism. So we officially say that the role of the nature of public-private partnership is putting private money into public projects, not public money into private projects. And that danger is there. And we handle that, first of all, by a very robust competitive system. I mean, every public project, at least of the central government, is guided by a concession agreement, which is a very detailed document laying out all the risks, etc. We don't negotiate this with an individual investor. We have the concession agreement and invite bids. So they bid either on the basis of a revenue share, which is positive, or where the project is not going to sustain itself by earned revenues, they can ask for a capital subsidy up to a certain maximum, which is pre-announced, and whoever wants the lowest capital subsidy gets the project. So the system is transparent, the concession agreement is known, the standards that are expected are laid down, and there's a lot of discussion before bids are invited. So anyone has an idea how to improve that concession agreement, to rebalance risks, can do so. And then the projects are actually awarded on a competitive basis. Now, the thing is, it's only 2 or 3 years old. We've had a lot of very good responses. Ideally, I'd like to be able to say this has gone on for 10 years, and here are the projects, and they've worked successfully. And I know some of the difficult, the Channel Tunnel comes to mind. You can run into humongous big problems. But so far, I think we seem to be finding the private sector response in many areas, and it's quite encouraging. But I think we need to do more, and certainly it's a work in progress, and we keep consulting to find out whether we can do it better.
Mr. Kostin?
Well, a quick view from Russia. I think confidence is extremely important, but whether it's enough for economic growth, China, which shows the quickest possible growth, definitely has a confidence, but also spending a huge amount of public money on developing specific industries. So I think what the Russian government is trying to do now is to focus not on building the bridges, which should be very important because there's very few bridges in Russia probably, but concentrating on innovative high-tech areas. Like recently, the nanotechnology fund was set, venture capital public government fund was set. So really we think that to provide the economic growth and to create more jobs, definitely there shouldn't be any growth without new jobs. I think we should focus on these innovative new technologies rather than probably creating some additional demand to buy cars or to keep inefficient the prices like the government was doing during the crisis to protect jobs.
Dominic?
Yeah, I just wanted to build on the innovation point because I think, well, I fully agree, obviously, with we don't need protectionism, and driving the Doha round forward, I think, is critical. It also is so important to look where are we going to get the growth for these jobs to occur, and what is the innovation policy that we're going to have. And I think that's another area where you can actually get cooperation. And again, it's not, about picking the winners in it, but ensuring that the conditions are in place. And again, to use some examples, you look at healthcare, which is not a very popular word to be talking about in the US. If you look at it from a growth opportunity and where technology can play a role, there's a massive opportunity. It is a very underpenetrated area, and I think a lot of jobs and value added and productivity could be created from that. So I think being able to pinpoint some of these areas where we can help create the conditions to generate more jobs and growth, and there are a number of them: healthcare, education, agri-food, let alone what's happening in the emerging markets.
Yeah, that really brings to fore a point that I think we can lose at a time like this, and that is there's a lot of human needs in the world. Huge numbers of human needs in healthcare and education and in so many areas of life, housing and improving conditions, environmental impact. And if we can find a way to restore enough confidence that we can start focusing on those, if you will, growth opportunities, rather than thinking that there's this fixed pool of demand and we have to fight over, who's going to get it, I think we'll be much better off. Mr. Evans?
Well, just a comment on perhaps trying to rephrase the protectionist question, because, I mean, the organizations I represent, we've got members in exporting sectors, importing sectors, people who feel threatened. So it doesn't actually help. We internalize that discussion. But I think, I mean, two points. One is that so far I'd agree that there is not this protectionist response which would get into really killing growth at the moment. Whether that stays that way, if there is not a backlash, I think is a key issue we should all be concerned about. The solution of that depends upon our success on the job creation agenda and the confidence agenda, and actually I'd say the engaging people in the discussion agenda, which is crucial. There's the more medium-term issue, which has come up in the G20, which perhaps is a more useful way to look at trade and capital flows, is how do you try and remove some of the wider imbalances, not just the financial market imbalance, but the wider imbalances, trade and demand, and the points you've just made, poverty in the world, needs in the world, supply, which actually gets away to the imbalances, unsustainable trade deficits, which we've seen, and unsustainable surpluses on the other. So my message on that will not just be done through trade policy. You need to embed the trade policy in a set of other policies, including employment, some of the standards and norms of poverty reduction, which in the International Labour Organization, to actually restore, I think, a more balanced global system. Last point, the G20 ministers have said they're going to look at different indicators now on that process, and the IMF's been given the job. I think it would be the heads of government. It would be a fundamental mistake not to have employment as a key indicator, with a review also of the quality of employment in that process. And I think that's something which can be done immediately. It can help to get a more balanced view on actually what's happening in the world, not go back just to a view, we've just got to look at deficits.
Well, I want to very quickly now open it up to the audience for questions. So if you could be thinking of a short, focused question for our panel about these two big topics, please be thinking of those right now, and let's give Mr. Trichet the last word in the formal part of this session.
No, I only wanted to say that I think it's extremely important that we don't forget the other side of the coin of global governance, namely the mutual assessment process of the G20, the framework for strong, sustainable, and balanced growth, which has been decided. It has to be run by the IMF. It should go to the G20 for the peer assessment, and I would say the peer pressure in order to reduce the level of the imbalances that are at the heart of the problem that we had to cope with. We had a financial sector that was extraordinarily fragile, but we had also this accumulation of imbalances. And there, I have to say, it's a formidable challenge for the members of the G20, because they have to accept that their own domestic policies could be changed for the sake of the stability and prosperity of the global economy, which is now the only pertinent entity at the global level. And again, it's a challenge for all countries concerned, and certainly for the Western democracies also.
Well, we have about 15 minutes in our session left, so who'd like to ask the first question? And let me emphasize the word question. Yes, sir. Please identify your affiliation just so we'll know where you're coming from.
Hi, I'm Bob Forbes with Forbes. One thing that we have not talked about here yet is something that does stimulate jobs and economies, and that is tax reduction. Does anybody on the panel want to address that?
David?
Yeah, I'm happy to. I mean, obviously, we have the real issue, which I can't go on and about enough in the UK, of having this huge deficit that we simply have to deal with, not for its own sake, but for the sake of confidence, for the sake of jobs, for the sake of the economy. Otherwise, our interest rates will be going up. But we do think that as we need to trade out of this recession, we should be trying to use tax as a signal to help encourage people to get out there and create jobs and create new businesses. So, for instance, saying that any new business that sets up shouldn't have to pay national insurance on the first 10 employees, for instance, something like that to try and stimulate the creation of new businesses and small businesses that will provide some of the growth and wealth. I think that is possible. I also think in the Western economies, our tax systems have become phenomenally complicated, and I think there is a case, particularly in corporate taxation, for fewer reliefs and exemptions and disregards and tapers and all the rest of it, and flatter, simpler rates of corporation tax. And I think there's something else that we can look at as well, which is, while everybody knows we've got this difficult and potentially quite painful readjustment as we try to get back to some normal budget balances, I think we should try and send a very clear signal that we want our countries to be successful, entrepreneurial, enterprising places where we want companies maybe that have left and gone to relocate elsewhere to come back. And I think one of the clearest signals we can send is sort of long-term targets for corporate tax rates to say this is how we see the future, and be in no doubt that this is going to be a very, very business-friendly country, as we need to be if we're going to get out of what's been a terrible year and a half.
Any other thoughts, Dominic?
May I ask about
Oh,
new
I'm
tax
sorry.
on bankers?
What?
May I ask you about new
Yes.
tax on the bankers?
Well, the government has set out a bonus tax, which they've put in for 1 year only. And I think that's going to happen. That will take place. We haven't opposed that. But I don't think it's a long-term answer to the problem. I think actually what President Obama was talking about, the idea of, as I said earlier, some sort of levy that could be agreed internationally in order to try and insure against future problems such as the ones we've had. I think that is a more long-term, more practical, more thought through. That, as I said at the beginning, we need to be hard-headed, practical, acting in strong national interest rather than knee-jerk politics of envy stuff, which may make us feel good for 5 minutes, but it's not going to solve the problem for 5 years.
Yeah. Another question? Next question? Yes, sir, in the back. Yeah, please identify yourself.
Yeah, I'm Davide Serra from Algebris Investments, a fund management company. I have a question.
In what country?
UK. I have a question today in terms of, I see a strong imbalance today. The US is printing money through the Treasury, the same are doing the Japanese. So out of a G7 country, Euro is the only country that right now has not a Treasury. And as a result, it's very hard to compensate the global imbalances through currencies, which at the end of the day creates jobs or blocks jobs. President Sarkozy said that this is going to be a key item on the agenda when France takes over presidency next year for G8, I think G20. Can you comment on what do you think is the imbalances created by today currencies that do not trade in the same way and central bank that don't have the same freedom at a time where jobs are at risk in the various area? And this has an impact both on the G20 emerging and most importantly, Japan, Euro area, and the dollar area. Thank you.
Anybody want? Mr. Trichet?
First
You're the central banker.
I want to be sure that I heard that the central bank had not the same freedom. Did you say that?
Yes, because as I said, the Treasury.
I mean, I'm sorry to say that it seems to me that the Federal Reserve is independent, and I don't doubt that for 1 second. On the currencies, I would only say that, as you know, Ben Bernanke and Tim Geithner are saying a strong dollar is in the interest of the United States, a strong dollar vis-à-vis the other major floating currencies. I say myself, on my part, I fully agree. A strong dollar is in the interest of the United States. I would also say that it corresponds to the overall superior interest of the global economy as a whole, and certainly the interest of Europe. So I echo what they say. And I would also say that as major floating currencies, we have the sentiment that a number of other currencies that are not floating could themselves have a progressive and orderly and timely appreciation. That's the way I see the running of the present situation. In the very long run, we could imagine other solutions, of course, but at the present moment, we are running a set of free-floating major currencies, and there you have the terms of reference that we agree upon.
Other question? Yes, sir. In the front row.
Nizar Baharna from Bahrain. While every country has its own problem and thinking of its own solution, how do you see the Doha round will succeed? And if it will not, what will be the challenges? Thank you.
Peter, you brought it up.
Well, I think it's a good point. I wish I was more confident than it would succeed, than I am confident in my knowledge that it's very important that it succeeds. I mean, I think it is very important that we continue to make progress on trade, but I'm not expecting that Doha is suddenly become easy. But I think even the process of trying to make it happen is helpful because you tend to get small victories on the way and you also stop sliding backwards. But I think the realities of the positions of the different governments, the political pressures they're under, mean that we're not going to see an early and quick resolution to Doha. Can I, just building on the earlier question and the role of currency, I do think there's an interplay between the trade and protectionism issues and the currency issues. I think ultimately over time we have seen, what we have seen is a shift in economic power and wealth from the West, broadly speaking, to the East, Asia, Middle East, and so on, broadly speaking. And that's a good thing. It's a good thing because it's a reflection of the fact that Asia has got wealthier. I think that will ultimately translate through to currency movement. Asian currencies will ultimately become more valuable versus Western currencies. It won't be an immediate, neat, smooth, unidirectional path. But actually, the less movement we have on that, the more pressure we're going to have on the protectionist issues and the more difficult it will be to resolve things like Doha.
Trichet?
First of all, to say that the future is not written. It depends on us that Doha will be a success or not, and that we will achieve what we want. We all agree, and I would say, not only on my own personal behalf, but on behalf of all central banks, that we have an immense stake in the success of the Doha round. Immense. Not only for the global prosperity, also for maintaining appropriate price stability, because, of course, protectionism would be the worst enemy in this respect. But again, it depends on us, and we have all to work to convince our own people, it seems to me, and I think what you said was very right, to have the most lucid possible public opinion to understand that there is a superior interest in solving that problem.
Yeah, it's very hard to keep forcing yourself at this moment to think that there's a positive solution here, that everybody can benefit. And this is a moment where it's very easy to start to think about how can I avoid losing, and that's a very dangerous approach indeed. Another question. Over here.
David Mullins, QVT Financial. I think regulatory failure was absolutely at the center of the problems that we've had, and I would like your assessment of the realistic prospects for improvement in regulatory structure and practice. And to put it in perspective, I'd like to remind everyone that we in the U.S. have 6 separate federal regulatory agencies. I will not name them all here, and I'm not even including the smaller ones that regulate family.
And you were part of it, David.
Yes, I'm part of it, thanks. And more than that, the administration looked at the regulatory problem and last year came up with their solution. which was to propose a new regulatory agency in the U.S. to regulate consumer financial products. Now, it is true they did propose merging OTS into OCC to keep the total number at half a dozen for regulatory agencies. And I would just further mention that there are strong provisions in the Congress currently to strip the Federal Reserve of regulatory authority. So given that outlook, what's your view realistically of the potential for progress here, given the sort of critical role that I think regulatory failure played in this crisis? Thank you.
Anybody want to take that?
I think
Mr.
the
Evans?
regulators are all a bit timid on responding. But
No.
Not this one. Yeah, good.
no, I mean, look, there's an awful lot of blame to go around on this crisis, so I don't think anybody should be modest about accepting blame. But I do think that some of the criticism of regulators which has come from the financial sector, it sounds a little bit like, you have a massive fire, the fire brigade comes in, and then you blame them for flooding your house. Really, what has been said, we're so close down to meltdown, regulatory failure was a part of it, is in a cultural context where 3 years ago, public bodies, opinion makers, many, and I would exclude Monsieur Trichet from this, were saying, look, we've entered a new world. We can all make 25, 30% rates of return against 5% average world growth because we're so intelligent, we're such good investors. Light regulation is the solution. That culture brought us to the edge of the abyss. And I think certainly you need some regulatory changes, some structural changes, some supervision changes. You need to deal with the problems of regulatory arbitrage, and I really do agree with some of those who've been arguing here this week that you need to bring this together internationally. And I think governments do need to give up sovereignty in it. But you need a culture change as well about how we go about this process in the future if we learn lessons of the past.
So let's conclude this way. The topic is, what should the future role of government be in assisting the rebuilding of economies and the financial system? Could I ask each panelist to give one sentence of your answer to that question? Who'd like to start? David?
Learn the lessons of regulatory failure in finance, and I think they are being learned, and recognize that particularly in the West, we need a new economic model based on saving, investment, a broader economy and export, rather than just housing, finance, and government.
Wow, he did it in one sentence. Excellent. Dominic?
I would say focus on the long-term health metrics, which are things like tax, less regulation, education, and how the infrastructure works.
Peter?
I think we all need a little humility. We all, businesses and governments, got a lot wrong, and as we work out what to do in the future, we should condition our recommendations knowing that we don't know all the answers.
Montek?
Well, I would say that the main lesson is to recognize that whatever the rules were when you started, if something goes badly wrong, the government will be blamed. So you better be watchful about the economy. Keep your eye on the longer-term growth prospects, which depends on individual countries, what the drivers of growth are. And certainly as far as the financial sector is concerned, its health is very important, and you need to look at what is a global consensus of what constitutes a good financial sector and keep moving towards it.
Andrei?
I think the role of the government will be increasing in particular areas of regulatory work and others, but I would like to underline that whatever decisions are undertaken, the efficient model will be only this when they'll be based on the agreed principle with the business, with financial community. Otherwise, we might be engaged in the game when one side is setting the rules, the other is trying to find loopholes, which normally the private business is quite successful.
Mr. Evans?
In the short term, it would be to give the same political attention which governments gave a year ago to resolving the banking crisis to the employment crisis. In the more medium term, I think it's opening up decision-making and accountability in a much broader stakeholder model of trying to get better forms of governance.
And last but not least, Jean-Claude?
Well, not being complacent in any respect, which means that we have to work tirelessly for having a system which would be at the global level much more resilient, be sure that we are really having a governance as it's been decided at the global level, to run the global economy, which is now the pertinent entity, and be sure that the information, the quality of information of our own people, the lucidity of public opinion enlightened by this quality of information is such that governments can really play the game of global governance.
Well, thanks to our panel for a very thoughtful and rational discussion. I only hope what really happens is so rational. Thank you.